Fed week. And then I think an even better, there are other central banks this week. I believe the big central bank meeting is going to be the BOJ on the 19th. And I've been thinking about it since we're approaching the 20th as the solstice. And you guys know I pay attention to the change in seasons for potential turning points in the market. It's a WD Gann thing that the change of seasons can also lead to a change in direction of where the markets are going into the solstice or the equinox, right? So that's a week from today. No, a week and a half, towards the end of late next week, I believe, would be the 19th. Yeah. So keep that, mark that on your calendar because I think a lot of reversals could happen. I'm starting off with the yen because this pullback that we had held a very important level. If you look at the weekly and you go back, this has been an important pivot going all the way back here. So that's what we held on this pullback here. So if you're concerned or looking to take advantage of a yen trade, carry trade unwind, this is going to be your first warning signal that it's going to happen. But since we have a confirmed high on the 4 hour, right, which is why I missed the short side here because of this confirmed high. And we also have a confirmed high on the daily right here that I'm thinking the market might press the BOJ to really do something by rallying into new high ground, which is a technical narrative, and not confirm up there going into the 19th. So if you're in the room, I did post uh, I did post some trades, and the trade was TDH here in the yen. So it was you have to check on Sunday evenings too. So this was the this was it. Basically, USD with both daily and 4 hour confirmed low. And the other part of the puzzle is yields heading up, which I'll talk about in a minute or so in the TLT. I talked about an imminent breakdown. I don't know if you guys got shorter about TLT puts, but I don't think the Fed's going to be able to bail out the long end of duration. In fact, everyone is talking about this is happening everywhere in the globe. The JGBs, the bunds, despite central banks easing, the long end of the curve yields are much higher than even when they first started easing, and the same is true here in the U.S. So it's possible that central banks really never had a lot of control over the long end of the market, but it seems like they're getting a vote of no confidence with their easing that bondholders, no matter the currency it's denominated on, want higher yields um, to invest and to buy and to hold because of central bank easing, fear of easing. I think Hassett even went to CNBC and talked about that may be part of the reason why the bonds are selling off. I think it's just supply, and then if it's supply, the issue is um, repatriation. So now the Japanese can have yields on their bonds. They don't have to come into the U.S. In fact, it's going to force some repatriation. That's what the unwind of the carry trade would do. But in the meantime, I think there's a shot that we challenge these highs. So took partials for 36. I have a BE stop in here. So I'm going to be leaning towards, if they give me another opportunity, to buying breaks in the end, looking for the highs to be challenged. Euro just, isn't really performing great, but, to me, it's kind of a neutral trade. I would like to see one more high above these highs. And, I've been talking 98 for a while in the Dixie. So maybe it's going to happen, maybe not. For the last 100 points or so, and maybe it's not even going to be 100 to the downside in Dixie, which will happen once we take out this flat bottom. I'm still going to be looking to buy the dollar. The market's pretty convinced. I'm hearing talk from traders in the business that people that aren't in the business are calling them and they're worried about the dollar. So I still think that before we have this big dollar decline, which everyone's talking about, that we have a double top and we're just going to head to new lows, that there could be a higher low that comes in here. And then we get something like this from wherever the dollar digs in its heels and turns from, that could take us back to 102, 103. So that's my preferred narrative. I still plan on trading it. Uh, One currency that casts a little doubt on it is I thought that Canada wouldn't be that much deeper than 39. It really came off the rails on Friday with their employment numbers were good. So Canada strengthened. So I really don't know what to do with Canada or even Aussie at this point. Aussie can't take out this high for the bear case to continue. So we'll see how much more the dollar has to the downside. And if Aussie fails to make a new high up here, it could still be a short. But my preferred short that I would like to get off 100 pips higher is the euro. And that's because even though I think we're going to have a rally in euro pound here, you could see at these highs we diverged. So what I'd like to see is a new high for this rally in euro and a lower high in euro pound. That'd be an important market tell to me. So let's get to yields now. I talked about TLT breaking down. Here's the breakdown. I don't think you could be long unless we reclaim it on a close. So I'm not sure the Fed could save it. Similar situation in the 10-year. To me, it looks like, we're first level 420 and we get through 420. I think you're talking about at least 435, 440, maybe 450. So that also, if the correlation holds, should be supportive of U.S. dollar yen. S&Ps, they're, really, to me, look like they're levitating. But, I can't rule out new highs by year end. The first thing that we need to see is some type of turn in the semiconductors. And I just want to point out, here's SMH making new highs, right? SOX has already done it. We're diverging. But then you look at NVDA, and it's hard for me to believe that we're going to have a sustained move in semis without NVIDIA. It's up a couple bucks today, but compared to what we just looked at as an SMH, it's been relatively weak. I'd need to see closes back over maybe 190 to convince me that we're going to new highs in NVIDIA. Still think that there's a break coming towards this mid 150 level. WTI, looked like we're going to have a breakout at 60. It didn't happen. Actually having kind of a negative day here in WTI, and that's really because they finally got on nat gas. So I'm still going to give WTI a chance. We bought it so well, and you should have taken partials. And what I said for what you have left, should we break out over 60, here's the target where you book at least another half and maybe hold a little in case we break out over 63. If we get to 63, I don't think you want to be long if we start taking out this 58 level. So maybe you give it another buck or so. Otherwise, we could be headed back towards these lows. So important week there as well. And I think that we've covered the board except for Bitcoin. Let's talk a little bit about Bitcoin. I'm still bearish. It has all the looks of a bear flag. I still see a confirmed low here on the daily. So I'm not a believer that this is the final low in Bitcoin. Probably setting up some type of rally to sell. Maybe it could get up to near 100 before it fails, especially if we have some risk on going into the BOJ. And invite everyone to join us here in our new room. You can find my stuff here. You can find Mike does a lot of work with pre-market stuff, so you could check that out as well. And oh, that must be what's going on there. So yeah, here's Mike V's daily comments where he provides a content on all the active stocks, and he'll start talking about, say, option flow. So you get a lot, he curates a lot of great content off X, some of the best guys on X that he shares with you guys. So remember, don't just count your barrels of oil or your Japanese yen stash or your gold or silver stash. That's something I didn't cover. I'll get to the metals tomorrow. They're mainly sideways, and the gold silver ratio, let me just show you quickly. It's up a little bit today, but I think that they still might try and clean it out. Here's the XAU. Gold silver ratio is right here. So it's up a little bit, and I'm looking at this 4 hour, and I still think that it's going to flush one more time, but we're going to have glaring divergence on new lows in the gold silver ratio. And perhaps that's a time I'll look at maybe even attempting a short in silver. So we'll see today. We'll see what happens here. Gold trying to rally, having some trouble. I still think the highs are in for the year and that there'll be lower levels. So I'll be looking to sell strength, especially if I'm right about the dollar. I know people argue that there are times both the dollar and gold go up, but very rarely does silver go up during bull moves in the dollar. So if I'm correct about a move to 98 and then 102 in another dollar bear market rally, I think we'll have corrective action in silver as well. As you can see, last few highs have not confirmed. We could still get another one, but the hyperbolic targets, I think, can wait until this dollar rally is over, 102, 103, sometime early next year is my best guess. So remember, everyone, have a great day. I'm not trying, I'm teaching you to use your armor in this market. And your armor is a shield. That's your risk management. That's your defense. And a sword is when you're attacking the market, when you see things technically and it's supported, and you still have risk management. So you attack with the sword. But don't go into the battlefield without either of them, both your shield and your sword. And I'll be talking to you tomorrow on Turnaround Tuesday. Adios.